Hey everybody. Strange but interesting story today, and it's weird doing a stream on Friday because I'm used to DCA, but slightly congested. Maybe I picked up Ben's cold yesterday on DCA. Only kidding, of course not. But let's go. Let's power through this. This one, as usual, I'm talking about my alliteration, and if you know this channel, you know I love alliteration. This story today is about decentralization and deflation risks as we go forward, things we need to be aware of. And keys working. This is edutainment, as you know. And the story today, real quick. There's a lot of weird stuff going on in the crypto space. We saw this yesterday. We saw a YouTuber getting very angry live on YouTube. And I'm trying to piece together patterns as to what's going on. Who's involved? What's Sam Bankman-Fried? What is he up to? And why is everybody so upset? And this is a developing story. I just got news of something literally 20 minutes ago, 30 minutes ago, and that's going to be a developing story. So I'll ask you later if you're interested in me digging further into this, but I think it's very important. So apart from that, we're going to talk about deflation and deflation risks and some of the inflation numbers we're seeing across the world and a bunch of interesting stuff like who's buying the Tesla dip, some interesting Bitcoin charts, and a whole bunch more. So let's start with a Bitcoin interesting chart to begin with. Big thank you to Sanjay for sharing this with me. This is per Swissblock, and as you can see here, it's a bit of a night chart, but they have a report that comes out every month, and they move the level of risk from the bottom right quadrant up a little bit and up a little bit again. So this is the movement over the past three. Now, the bottom right axis is the risk axis, and the top one is the momentum or trend. So obviously being in the bottom red box is bearish momentum, trend is high risk, etc. Moving up to the yellow box, which according to them we just did, we went from a score of slightly higher risk. I think the risk went from 63 to 65, but the trend is positive. It's more bullish, which means the bearish trend has lost steam, which basically means transitioning into that yellow quadrant, and they call this the state of the system, state of the Bitcoin system, I call it, from Swissblock. Now, if you look historically, they were talking about how the 18,000 to 19,000 support level has been there, and that's a very bullish sign, and that's part of why they believe it's moved out. They believe there's no more downside. And Bitcoin is still sensitive to incoming data, yet realized volatility is significantly low. We'll talk more about that in a minute too. And their momentum index depicted a fading bearish trend, which technically can be construed as bullish momentum as we go forward. So really, in a perfect world, we want to be in the top left green box, which is bullish momentum and low risk. But we're at least bullish momentum, high risk. So things could still go sideways. But that is from Swissblock, which I thought was positive. Next, which is kind of unrelated to the story, this just came into my radar, but I thought for those in the US, it took me by surprise, but the top United States for crypto, according to Smart Asset and their survey of many enthusiasts, Google searches, local government regulation, job postings, crypto-friendly merchants, ATMs, etc., tellers, number one in the United States is Nevada, number two is Florida, number three is California, and four is New Jersey and Texas. And Colorado and Illinois are number 6 and number 7. I just thought I'd share that because I thought it was fascinating and it did not align with what I thought. I thought California would be number 1 and it wasn't. So we shall see where this goes, and this will develop and change every single year as we go forward. Now, as I started this off, I spoke about volatility. This is from CNBC, and Bitcoin's volatility fell below NASDAQ and the S&P 500 for the first time since 2020. Good news. Well, a lot of people say Bitcoin is too volatile to be an investable asset. Well, another piece of FUD out the window, gone. Now let's talk about another little piece of good news. This is the Grayscale Bitcoin ETF gained support to overturn the SEC ruling. I did check the GBTC discount. It's down at 35%, and it came off the 36.5% kind of all-time high discount. So I don't know if it's really reacting to this news, but apparently a former SEC Commissioner, Joseph Grundfest, and a former SEC Chairman, Harvey Pitt, support Grayscale in a letter that they wrote. or a brief, I think they called it. And notable contributors as well were the former CFTC Commissioner Brian Quintes and Mark Wachin, who now works for Sam Bankman-Fried's FTX. Sam is everywhere. His people are everywhere. And love it or hate it, I think his approach is correct. Obviously, let me zoom out for a second. The more regulation we can get in the space, the more money comes into the space, the more price goes up. The reason people aren't in right now is because there's no solid regulation there. And Sam Bankman-Fried is hiring all the players, spending a lot of time in DC to convince the powers that be that regulation is needed, and he's helping shape that regulation as well. And that was part of the blow up yesterday from BitBoy, I think it was. But anyway, let's dig a bit further. The consensus among these supporters of four folks I just mentioned allege that SEC decided on merit-based regulation as they've previously approved riskier Bitcoin-related ETFs, including futures, etc., and other ETFs that are even more risky as well. So they believe that Gary Gensler needs to be forced to change his tune going forward. So again, a little tiny bit of bright light for GBTC as we go forward. Second of all, let's look at the Bitcoin versus dollar index. And we did touch on this yesterday on DCA. In fact, Ben asked me the question regarding did the Dixie topping out at 115. And check out that video on his channel yesterday if you want to hear what we had to say about that, Rob and I. But Bitcoin has become much more sensitive to incoming data and external factors. And this is seen by the higher intraday volatility. But once the intraday price action breaks through support or resistance, Bitcoin drops or rises to the next level, marking the next move. And the key driver so far that dominates the Bitcoin price action is the Dixie, the dollar index. And as fear dominates markets due to uncertainty around monetary policy, the Fed, inflation, global recessions, the more the dollar index has an impact on Bitcoin. And the strong inverse relationship can be seen here in this chart, suggests that the strengthening dollar will continue to pressure Bitcoin. But the question is, as we discussed yesterday, has the Dixie topped out? If it has, it's good for Bitcoin. But even if it hasn't, I don't think it has that much of an effect anymore because all fiat is going to you-know-where. So we don't need to chat more about that. Let's touch base now on kind of one of the big stories today before we get into the deflation story. And this one kind of has a number of angles I haven't quite fathomed yet. But I just literally got this article, just came out half an hour before I went live. And if I had more time, I would have done a lot more digging. But I want to tell you what I'm thinking. And I'll ask you if you want me to dig further into this for tomorrow's video. But this is the tricky story, and I'm trying to get inside Sam Bankman-Fried's head. He said, basically, FTX will delist all crypto that they deem to be securities. He has a legal team working on doing an analysis of all assets that they list and running things like the Howey test, other relevant case law, to find out if what they have listed is a security or not. If they deem it as a security, they will delist it. So I'm trying to think, what's he up to? Does he want to have nothing on his shelves to sell? And this is FTX US, not FTX.com. And again, he's trying to get tight with the regulators. Maybe this is a way of saying, hey, FTX is on the straight and narrow, and there are clear processes for registering digital asset securities which protect customers while allowing for innovation. And there's a lot of stuff happening behind the scenes that I'm trying to piece together in my head. And that is, first of all, we've seen a lot of weakness in layer ones over the last 24 hours, in the last week as well. And I'm wondering why. Maybe this was leaked. Maybe certain exchanges will be forced to delist those that are deemed securities, or maybe those that have a certain level of decentralization, so they wouldn't be deemed securities, because we know Gary Gensler is very much focused on that, and he spoke about that at MIT many times as well. So what I'm thinking, this is weird. I know he is a big Solana bull. He said the best risk reward for tokens, etc., would be Solana going forward. We've seen what happened with Ethereum post the merge. We've seen the changes in certain cryptos as well over the last crypto winter, last 6 to 9 months. A lot of stuff is going on, but is this a trap, or I don't know. So let's talk about this one thing, and this is what I can dig into tomorrow. If anybody's interested, please drop a comment below. Then it'll tell me if it's like, oh, this is boring, I'm not interested, I won't do it. If you are, I will do the work tonight. So this is all about, drop a comment if you want me to analyze this for the top chains. Pull up the coefficient, the Nakamoto coefficient. And this basically searches the number of nodes. Make it, hope I don't screw this up. It's the number of nodes that need to be compromised for a blockchain in order to obstruct it from functioning correctly. So, for example, if you see, I think it was Cardano over the last 3 months, their Nakamoto coefficient decreased from 29 to 22 because 209 stake pools have retired. So stake pools are disappearing, and that's bringing down their Nakamoto coefficient. And if you look at Ethereum, they've got some big stake pools that run, well, not stake pools, I don't know what they call them, big nodes that are kind of more centrally controlled. And just 2 or 3 of them could knock out Ethereum. So let me know if you want me to analyze this. But the interesting angle here is, decentralization is said to solve most all problems for blockchain and regulators, because that means it can't actually be essentially controlled. And I know all the story of, some networks need to be turned on, turned off, and reset because of problems and bugs. Well aware, but let me know if you want me to analyze this tomorrow. It could be an interesting angle. Why is Sam doing what he is doing? Triggers me, because he's the type of guy, he's like a very good attorney. He won't signal what he's doing without having a detailed plan 6 to 9 months in advance. Then he puts it into action. I think what we're seeing now is putting things into action. And that's why we saw people yesterday very, very upset. So in other news, let's switch gears and talk about the stock market. This is an interesting, eye-opening chart. This is a fascinating historical record associated with only 2 prior instances. If you look at this chart, you have on the bottom right axis US stock return, and on the left vertical axis the US bond return. Only 3 times in history have we been in the bottom left quadrant, and that is 1931, 1969, and 2022. Both were proceeding to a revaluing of currencies versus gold. In the 1931 example, it's amazing how much history about money is so relevant today. But I think the decline in stock and bonds led to Roosevelt's devaluation of the dollar, I think 1933 or 1934. It was a 70% devaluation versus gold. And in the 69 example, it was only 2 years before the US was forced to abandon the gold standard in the Nixon shock. And I spoke in detail about the Nixon shock a couple of weeks ago. And what will happen this time? Well, suffice it to say, we believe this is truly going to be historic. We saw what happened in the UK. We saw the cracks. We know liquidity is a huge issue. I've been talking about financial Armageddon for, 6 months now. And things are really beginning to emerge in this 20 trillion US Treasury market, something that has rarely ever been seen before. And last Wednesday, I think was October 12th, Yellen addressed the US Treasury market liquidity concerns for the first time ever. It's like, alarm bells, we got a problem. Houston, we got a problem. Today, the Wall Street Journal, I tweeted about it first thing this morning at 6 a.m. The Fed is considering some changes. So I don't want to give people hope, but things are breaking, and they know it, and they're realizing it. And the irony, given the Treasury has deficits, yet plans to borrow even more money to sponsor different programs, is just ridiculous. Anywho, as I always say, QE to infinity, that's what's happening. But again, bond returns, stock returns have only been down here in history 3 times. It is an ugly year, 2022, but we'll find a way to survive. Now, enter Elon Musk. There was a question from Tesla owner Silicon Valley. How long do you think the recession will last? And just guessing, Elon Musk said, but probably until spring of 2024. Buckle in, ladies and gentlemen. And who do you trust more? I know there's a lot of Elon Musk haters out there. There's a lot of people that have a lot of pent up whatever to everybody else, but he's probably the smartest guy in the world, or at least one of them. Do you trust his view on macro or that of a government official? Again, I'd like to hear from you all. Comment below if you want. But global GDP, I think, grew about 6% or 5% in 2021, and it's going to decelerate hard. It already did in Q1 and Q2. IMF is crying out saying, oh, the world is getting smashed. Stop with the strong dollar. And a whole bunch of other stuff is cracking up. But the Federal Reserve GDP, I think, So far, it's only grown about, actually, I don't even know if it's great. It's got, I think the first time was minus 0.6 and then minus point whatever. But they correct it all the time, so it's impossible for me to keep track. But you got Musk, who is an absolutely genius capital allocator, okay? And he says, batten down the hatches till Q1 2024. That gives us another 15 months or so, which is a very long recession, and that's painful for everybody. But as they also say, is by the time you realize you're in a recession, you're actually coming out of it on the other side. But Jeff Bezos also said, batten down the hatches, tough economic times ahead. Again, two brilliant capital allocators, both flashing warning signs. Recession, ladies and gentlemen, no ifs, ands, or buts, it's coming. Now, speaking of Tesla, a little bit of interesting data that came in. Thank you, Sanjay, again. This was a sheet that came in, and I pulled out the numbers and created a little graphic. This is the top selling vehicles globally in 2021 versus, and I had to insert it, Model Y 2022 expectations. Now, Elon Musk expects the Model Y to be the best-selling car on Earth next year. A lot of people say, that's impossible. It's a new car. How could it be so perfect? And how can it sell so well all over the earth? Well, I covered that in Is Tesla Drastically Oversold video last week. Well, here is another proof point. Model Y, based on this data, because a lot of companies like Honda are really suffering right now, Toyota aren't selling as much, etc., etc. Model Y is already number 4, I reckon, in 2022, if not potentially number 3, depending on how slow the Honda CR-V sales are. And Honda has just fallen off a cliff. I don't know exactly why. I don't follow Honda. But that is an interesting point. The two on the top left, the Toyota RAV4 and Toyota Corolla, I always thought it was a Camry was the number 1, but it's apparently Toyota Corolla and RAV4 because they sell a lot of these in emerging markets. They sell 1.1 million each, and then you've got the Honda CR-V at around 800,000 and change, and then Nissan Sentra. You also have Tesla Model 3 in there at about 500,000 units, but Model Y is outstripping everything. And related to that, guess who's buying the Tesla dip? Lover or hater, Cathie Wood. I still, I like Cathie, I always have. But her innovation fund added 66,000 shares of stock, I think, yesterday. And as the stock dipped, what a great time to buy. With a lot, I think, following the third quarter earnings report, she just snooped in and grabbed them. And her price target, as a reminder to everybody, they still believe Tesla will reach about $1,530 by 2026, which is higher than my target of about $1,260. But still, she's been pretty good at price targets, and she was doing price targets for Tesla back in 2019, and she nailed it. In fact, her numbers are even sandbagged a little too much as they go forward. So that's the Tesla news. And again, it had a good, strong day today, and so did the market. So let's talk about the second topic today. Sorry, it took a while to get here. This won't take too long. But this is from Alf Macro, and his friend, who is a hedge fund manager, sees the world healing from inflationary pressures very fast. He did not mention his friend's name, but his friend said supply chains are easing, core goods inventories are very high, new orders are very weak. There's a huge deleveraging in China, which is supposed to keep that demand engine at bay. And everything is extremely disinflationary or deflationary, whatever you want to call it. And Alf shared the chart here below. And it shows you the actual dip in inflation, the sharp dip ahead, and the historical one back in, I think it was 2007, 2008 financial crisis. And here we are again on cue. And Alf showed this fellow this chart, and he says there could be a 5% drop in the CPI over the next few quarters. And his colleague agreed. Absolutely. So again, the demand destruction is there. Early 2023, we can expect this huge dip. Things are already coming crashing down. And to show you a point of reference, we have this chart from TruFlation. Hello to the TruFlation folks out there. I saw they added the UK too, which is pretty cool. We'll talk about that in a second. But here, if you look at the TruFlation over the last 12 months, it is now lower than it was in November 2021. And we also know what happened in November 2021. That's when Bitcoin hit 69K, the all-time high. So did the stock market. And ever since then, things have fallen down. So when you think about things like inflation and stock markets, there is an interesting correlation to some extent, but there's always that lag factor, and that's just what you got to time. So from the top of the market to the top of inflation, it's like 6 months in there. But again, it's good to see it's coming down fast. Now, this TruFlation number, remember, this is not the CPI. This is their real data. The CPI is very fabricated, very slow to react, full of bad information. This is true inflation. So when you see that, you can expect the CPI to be more like half, like 4%, instead of this 7.82%. But it takes the CPI numbers a long time to react, where TruFlation is a true indication of what's happening. Now let's switch gears for the team in the UK. For those of you still up, hope everything's okay. Hope you got a new prime minister soon. My vote is for Sunak, I think. Not that I have any influence over there at all or anywhere. But here, this is a very stark contrast to the US inflation. The TruFlation in the UK is 4x'd just in the last 12 months alone. It was 4% back in October, November 2021. And now 17.26%, over 4x, sorry. It is shocking. Actually, the lowest year-to-date number was 2.99%. I think that hit mid-November or end of November. But that is kind of scary. I was talking to a nurse today in Europe, and they just got their raise package, and in a place not too far from the United Kingdom. And they're offered 1% salary raise. And their inflation environment is not dissimilar to this. And I told them, I said, you got to ask for more. That's just incredible. But of course, it's mandated by the government and craziness. So that is that. But let's talk. Final topic for today is the impact of inflation with FX on certain commodities. As we look at this is a fantastic little chart to give you an idea of the impact of things like a strong dollar and how a strong dollar hurts other economies. So if you look at Brent crude oil, it peaked on March 8th, 2022. Since then, it's down nearly 30% against the dollar. But if you're in Japan, it's only fallen 5%. And that is the pain that it causes, because their yen, their currency, has fallen so much. Even though the price of oil in dollars has tanked, they still have not seen any of that. The British pound is number 2 on the list, down 14.5% versus the US, nearly 30%. And it's probably going to change a little bit more. Chinese yuan down 16%. But again, this is the pain that actually hits, and the correlation between things like oil deflation with FX being weak, having a weak currency, fiat going under, hurts people on the ground. So with that, everybody, I'll see you all tomorrow. Again, if you want to dig into the Nakamoto coefficients for all the top layer ones, I will do that tonight for you. If you don't, if you're not interested, let me know either way. I read all the comments, as you know. Thank you for being here. And my voice made it just about till the very end. Okay, I'll see you guys. Thank you, and have a good night.